Good afternoon, folks. Welcome back. I'm going to talk about the ICT sick sister concept. So if you were confused by today on Twitter, I'm hopefully going to be able to wipe away some of, if not all, the confusion pertaining to my sick sister concept. I'm going to show you why I chose to use the NASDAQ today, and let's start off by saying that the economic calendar this week is heavy-handed on the Wednesday, Thursday, and Friday. So Monday and Tuesday is lacking any real meaningful medium or high-impact news drivers. So it's expected to have these consolidation days, which is what we're seeing here. I don't look at this as like a swing day or a trending day. It's basically staying within the range of this low. This high was just slightly penetrated and then back inside the range between the high here and the low here. So we have consolidated. Okay, that doesn't mean it can't be traded or that you can't find setups in it. It just means you have to be much more nimble and you have to be more versed in market symmetry. So because it's going to be a consolidation market, and how did I know it's going to be a consolidation market? On Twitter, I mentioned that we had an old new week opening gap in close proximity to our current new week opening gap. I'm going to save that time and energy in showing you that here on the chart. You can find that on my tweets. So NASDAQ, let's take a look at the business here. This is the Dow in relationship to the NASDAQ. Notice that this market here on the Dow was able to make a higher high, whereas the NASDAQ was unwilling to make that higher high. Now I teach that as SMT. Sick sister is similar but not the same as SMT. There are conditions with a trending market where the sick sister opportunity will see a move that hasn't transpired yet on one asset or correlated market, meeting or exceeding an old high or an old low. And I'll explain what I mean by that. Because this high here was taken out by this high on Dow, it would be reasonable to expect in a symmetrical market that the NASDAQ itself would go up there and hit that too. But look closer. What do you see? There's a failure here. So this high is higher than this one, whereas this high is higher. We have a very specific time of day, and we're also looking at this divergence, and we're going to take a look at the ES. The ES was able to make a higher high here as well, but it didn't make that higher high there. Notice that? So if I take this idea and show you on the Dow, we penetrated this high here. Let's add some lipstick to it. So you have the high broken here at 8 a.m. Higher high. Both this high and this high was exceeded with the Dow. On the ES, we made a higher high here, but we did not make the higher high here at 8 o'clock. So this high was lower than this one. If we look at the NASDAQ, we had that lower high across both. This high didn't get penetrated, this high didn't get penetrated, and we're diverging. But now here's where the sick sister approach occurs and how to use it within a consolidating market. If this one's weak, we're going to wait for this one to drop down into a deep discount. That being this low to this high. Let's run a fib on it. So from this low up to this high, here is your optimal trade entry levels here, and here's equilibrium. So it trades down below it here and then goes into the order block, which is these consecutive down close candles, the black ones, and then we have a fair value gap here. So there's your discount. If you look at this high here and this high here, that's buy side resting here, and I don't need it to go all the way up to here to find a profitable trade. So I can be buying in this fair value gap inside of the order block below equilibrium inside of optimal trade entry, these two respective levels here, 62 and 79% on the fib. So I'm going to look to buy in a discount, and you can see that is the case here, right there. And I'll hover over top of it, you can see. Okay, I accumulated the position inside the order block, inside the fair value gap, inside of the deep discount, aiming for the buy side above this high here, and the buy side above here, and I'll put one right between the two of them, here, here, and there. Okay, so that price run here, I did not need it to go up to here, even though it was likely to do so. I got out above here because I knew that once it takes out this buy side, it could want to rejoin what has been seen in the ES and the Dow. Now let's go back to those. At these highs here, at this specific high, look how much more it dropped off on ES and the Dow. So yes, they all three dropped. NASDAQ did not have the ability to get back above this old high, whereas the ES was, the Dow was. The Dow was also able to get above its high here at 230. The previous trading session, ES was not willing to do so. But so one of two highs were taken out on ES. Two of both highs were taken out on the Dow. Neither high was taken out on NASDAQ. That's the sixth sister, and we're in consolidation. So that means it's likely to drop down to a discount and then rally to go back above the buy side, whereas Dow was able to do so. I don't need ES to do so, and it's already went lower anyway. So using the sixth sister in a consolidation market means we're looking for the one that failed to make a higher high or lower low, which is like typical SMT. But the sixth sister approach or concept that I'm using is that it's going to try to do it later on. And you want to put your focus on the weakest one because, well, the Bible says so. First one now shall later be last. First one now shall later be last. This one couldn't even muster up enough momentum to climb higher. Whereas the ES did get a little bit higher, but the NASDAQ ramped all the way back up into the buy side here. So in trending markets, where we'll see opportunities like for instance, say this was a trending market, not consolidation. Whenever I see this divergence here, and the ES and the Dow has made higher highs, but I don't believe it's reversing or even likely to have a meaningful retracement, I would expect this market to resume and go higher. But because the sixth sister approach while in consolidation, which is exactly what I mentioned this morning, because we had the converging new week opening gaps. Whenever you have converging new week opening gaps, they're real close to one another, the market's going to be real likely to consolidate and go sideways. Add to it the economic calendar that we had today, which was anemic. It didn't have any medium or high impact news drivers for today. So we had a lot of factors leaning on this market being, as we see here, consolidation. At 2 o'clock in the afternoon, it did trade back down into an order block, which is here. So at 2 o'clock, there it rallies up and then bumps the buy side there. But notice right above these highs, once it did that, it had a strong drop down. And you have to be careful with that because it can leave that high untouched. It was this highs right here is what I was really focusing on and factoring that sixth sister concept, waiting for a discount. We don't just simply buy here because it's going up here. I've seen some people reacting to the tweet thinking that they understood me, but they did not understand me. When we're buying, we're trying to buy at a discount. So it had already rallied up. So it needs to drop down, and we see it going down into the opening session, and then you wait for that typical opening range 30 minutes, but here, when it's dropping down, we're inside that 30-minute range because it's trading into a deep discount. It's inside the fair value gap. It's inside the order block. It's below equilibrium, and it's done a handsome job of getting down into a cheap discount price with PD arrays that are lining up with a potential long to run out the buy side here, and then eventually here in the afternoon of the PM session. I have more to teach about the Six Sister concept. I'll teach you more refined lessons with the Six Sister. It'll have its own presentation, but I just want to kind of give you a review today and draw the parallels and the oppositions to what is classically seen as my SMT. It's similar, but the approach to using the divergences in the later discount or later premium, how you use the information is starkly different. Hopefully you found this one insightful. Until I talk to you next time, be safe.